Hey everybody, thanks for taking time out of your day to watch this video. My name is James Shepard. I'm your host for the 100th Merchant Sales Podcast. Now, I'll make a confession. I didn't even know it was our 100th episode until we were done shooting it, and our content team was working on it. It's like, wait a minute, this is episode 100. So I love it because you know what? It's business as usual here. We're just producing great content for free and providing you with value, and this episode is certainly no exception. Today we talked to Dustin at PayBright about their really unique free terminal placement program and how they've included things like smart terminals in that program and how they've integrated that with their cash discounting. So really interesting interview, got a lot of great insights. I think a lot of ISOs would do well to learn from the program that Dustin has, and a lot of agents would do well to check it out too. So very interesting program there. Then we go to an insider's report where Patty talks about this big news story with the FTC and First Data, now Fiserv, and this issue they had with an interesting situation. I believe it was over 300,000 chargebacks in 1 year from a small ISO from, I believe, one or maybe 3 or 4 merchants, a very small amount of merchant accounts. Just very interesting. Fiserv ended up, I think, paying now $40 million in damages for this. And so a really interesting story there, kind of a cautionary tale. And then I get into questions from the field. And my questions from the field, I think, tied in nicely to the interview because we're talking about cash discounting, not my normal thing I talk about with cash discounting. What I talk about is there are these little annoyances with cash discounting, whether it's the reconciliation, the daily discounting, the refunds, the sales tax, these little things that actually can make it annoying for the merchant and even the accountant, the merchant's accountant, to deal with cash discounting. And I talk about that as a threat where now there's so many companies out there that do have good technology and, do have these things in place that you really want to start taking a fresh look at those things and just make sure that you are securing that portfolio and protecting it from attrition after you've worked so hard to build it up. So a lot of great stuff. Let's dive right into that interview with Dustin. I really think you're going to enjoy this one.
Welcome to the Merchant Sales Podcast.
All right, everybody. I am here today with Dustin Magaziner. Dustin is a managing partner at PayBright. How are you doing today, Dustin?
Doing well. Thanks for asking. How are you?
I am doing terrific. So today, Dustin and I and Patty are going to talk about the future of free terminal placement. Super interesting topic today. Excited about the interview. But before we dive into that, Dustin, I'd love to get your story. We always love to get that on the podcast here. How'd you get into this crazy industry? How'd you end up with PayBright?
Yeah. So, I tell some people I was into the industry to some extent. My background's a little unique in that on the one hand side, my family owned a lot of retail and, card present environments. On the other side of things, my family owned a company that was really heavily involved in e-commerce in the late 90s and early 2000s, which was very involved in the processing industry. So you sort of merge those two together and you have somebody that just grows up with some knowledge not everyone has. So one summer when I was in high school, my dad asked me to do some research on why he was paying so much for credit card processing fees. And I made some calls to some people that my family knew on the other side of things and was quickly able to find out the answers to those. And they weren't as quick, those answers, as maybe they should have been. And quickly realized there was just a better way to do some of this stuff. It didn't need to be this complicated industry. And so that's sort of the background. And I was in college. I went out and started knocking on doors and really was just out there hustling day in and day out for 3.5 years. And then when I got out of school, realized we had a little bit more than we ever expected to have.
Sure. So Dustin, this topic is so interesting. And, it's funny because usually with these interviews, we usually start with this pure information dump, and then we get into more specifics about the company. But what your company does is actually so unique as far as the free terminal placement program that I think the best way to frame the conversation is to just start there. So could you just kind of give us a little bit of an idea, flavor of how PayBright thinks about free terminal placement and kind of the big picture of how that program looks?
Yeah. So, in a nutshell, we really believe that if, agents or processors or sales partners of any kind are having to pay for equipment or put it out of their pocket or lease or rent to merchants, they're a little behind and maybe doing a disservice to both themselves and the merchants they work with. We really believe that, the future of the industry is free placements, about that relationship, ease, right? We're seeing all these kinds of pay facts that are really doing well because of the ease of setup and no barriers to entry, no real heavy upfront costs. So,
Right.
we really believe that the more friction you can eliminate, the better. And I, full-heartedly believe one of those main pain points for businesses is upfront costs, including terminal placements. There's obviously all kinds of new technologies emerging in the form of smart terminals and things like that. But unfortunately, that also increases the price point for these merchants too.
Right.
So, our model is really to help these merchants get what they need without having to pay a premium for it. So all of the accounts we work with, are on our free placement program, where, they get what they need, not what we hope they need or want, but what they really need, at no charge to them.
Yeah, and so this is so interesting because I've obviously been in the industry a long time, and so I've seen a lot of these free placement programs. And the first thing that really stuck out to me about yours was just the scope of the different types of terminals and hardware that you make available. We really come a long way with free placement. Going back to when it first started. But I mean, even today, I would say the vast majority of free placement programs that I'm aware of, it's like a VX520 or whatever.
Right.
But it's nothing else. So can you talk about your kind of selection? What types of terminals are you placing? And then also maybe if you could, which ones are most popular right now with agents and merchants? What are you seeing there?
Certainly. So we like to say we pretty much have everything under the sun that our sales partners and merchants need. Even if it's not what we would call our standard placement, we're very, very flexible with making it happen if it makes sense for the merchant. Again, we're not trying to fit the merchant in a box really. Of, hey, this VX520 is basic, take it, it works for almost everyone. So our free placement includes pretty much everything from standard terminals like your VX520 or PAX S80s, your Deja Vus, and your FD terminals if those are needed in certain cases, to free Bluetooth mobile readers, to pin pads, which can be used for POS integrations or pin debit on a terminal, but also smart terminals, Clover Flex, Point, PAX A920. These devices are also included truly on our free placement. They're not rentals, they're not leases, they're what we call them, free placements. And so, really, we're not limiting our businesses, we're not limiting our agents. We say to our agents, use what is right, not use what we tell you to use because it's what we have. It's really supposed to work for the merchant and the agent.
So because of the breadth of terminals you offer, it would seem to me then that you can pretty much go after any vertical. Is that sort of your strategy, or do you have specifics?
Just because of the nature of what we're talking about, card present is certainly where we can differentiate ourselves the most. If they're card not present, there's not really a huge need for a free terminal placement.
Right.
So I'd say that, this specific part of what we do is really, really, competitive in the card present environment. But yeah, any business in that card present vertical is a really, really great target market for our program.
So let's talk about the question that every ISO exec is asking themselves while they're listening right now, which is, why are you doing this from a financial perspective? So of course, it goes without saying that placing a VX520 is a lot cheaper than placing, a Point. So, what's your rationale from a financial perspective? Is it, greater lifetime value? What's your rationale as from a profit perspective of why you built your business this way?
Yeah, so I think it's, a few things. One is the length of the account. How many agents are losing accounts right now because VX520s have been rebooting all over again? Or how many agents are losing accounts because, their merchant went in and saw a fancy new Square device and went out and purchased that because it looked a lot better than their PAX S80.
Right.
So it's one, staying competitive from a sales environment, but two, keeping attrition low. Being able to provide these more advanced technologies don't just help you sign new business, but help you keep your business. So, we all know that the average length of an account has been decreasing over the last several years. We would argue that our attrition and therefore our length of an account is holding much better than our competitors because we have, better technology available. On top of that, frankly, profit and margins aren't as huge of a conversation when you're selling value or technology, which is another big advantage for our agent base. Agents that may be selling a deal at, hey, I can lower you down to 5 and 5, may be able to say, hey, I can come in at a very comparable rate, maybe save you a little bit, but that terminal that you have on your counter that's been relooping or rebooting every, hour, I'm going to replace it with this brand new fancy device that's going to work a lot better for you. So it has a lot of advantages. And then of course, it has the advantage that we get top tier agents as well in our program because they're looking for this sort of solution.
Sure. It's so interesting because sometimes we batch these recordings. We actually just recorded a podcast episode right before this. And one of the topics we were talking about there that is just a common theme is lifetime value.
Right.
It doesn't get talked about very much in our industry, which is kind of strange since we're a recurring income. You know what I mean? It's like, well, I'm
Right.
making $100 a month. Well, I'm making 60. Well, I'm making 120. Well, who cares? If you're making 120 a month, but you're only making it for 14 months, I'd rather make 80 for like 90 months, So I think there's definitely a conversation there, isn't there, of lifetime value. And we're looking at, should we invest 400 or 500 in a free placement versus 120? It's like, well, if the lifetime value of the account's going to go up by $2,000, it's probably a pretty good idea.
100%. I'll tell you something else that's just sort of a frustration of mine that I see with free placement sometimes, is that they'll offer a free placement only on new mids. It drives me nuts because what you're saying is the account only has a value when they sign up, but really we all know that heavy cost is up front. It's much easier to keep an account once they're up and running.
Right.
So I've seen all kinds of programs where it's a free placement, but once the account's up and running, they've got to purchase if it breaks or needs to be upgraded or anything like that. And again, that's another benefit of what we do is we'll replace these terminals or swap them out later on when the account needs it. Because again, we want to keep that account with us for the next 3, 5, 10 years because we don't want to give them a reason to change. So we really try to take all of those reasons out of the equation.
So one of the other types that's been an interesting kind of frustration, I think, for a lot of agents is larger accounts. You mentioned, I agree with you. The existing accounts are definitely one. And I think that's almost more a function, unfortunately, of most of the ISOs realize they can sell something to their current account. So they do. And, I'm a greedy capitalist as well, so I get it. But, when we're talking about larger accounts, when I'm trying to sell a larger account, they've got, maybe it's multiple locations or it's a single location that needs 3 or 4, devices. How do you handle that, situation on your free placement side?
Yeah, so we don't limit placements to one terminal merchant. Again, that basically tells agents that they're going to have a hard time selling bigger accounts, which is ultimately what we all want. We all want our sales partners and agents to target larger merchants, but then they, in often cases, run into the issue of, okay, well, they need 5, 6 terminals. So we don't have a cap. We base it solely on volume. The larger an account is, the more they qualify for in terms of equipment. It's a standard ratio. So, as the accounts grow in volume, the more equipment they qualify for. And it just makes it really nice and easy that the agent knows when they walk in what they can cover. I can't tell you how many agents I've gotten calls from that are like, this merchant needs 2 terminals, but they're doing $150,000 a month in volume. It's going to be priced well. Can we do it? I'm like, yeah. And you didn't even need to ask. You could have just submitted it. There was no issue with it whatsoever. Right. And I'm not saying 150,000 is the minimum for 2 at all. It's actually just 50,000 a month. For a second unit. But yeah, we want to encourage these larger accounts, not discourage them.
Sure. One other one I just thought of that I had to touch on real quick. I think I understand your program, the way it works with this, but talk about pin pads. You mentioned it earlier, but another one that really cracks me up is, the ISO is like, yes, you can absolutely place a free terminal because we want that account. Well, they also need a pin pad. Well, you're going to lease that.
Right.
What's the deal with that?
This has been an awesome thing for us recently because unfortunately we've all been dealing with the effects of COVID. Sure. And COVID, businesses are looking for pin pads right now more than I've ever seen. There's actually been a huge decrease that we've seen, and I'm sure everyone has, in pin pads over the last several years because businesses really aren't doing as much pin debit, especially in smaller businesses. But with COVID, businesses don't want to touch credit cards. They want to have a pin pad that faces the customer and a credit card machine behind the counter.
Right.
So with us, it's a 1-to-1 ratio. We're going to put in a terminal, whether it's a PAX S80 or a Deja Vu Z8 or whatever it is, and they need the equivalent pin pad. We're going to provide it. Right. And, that again helps you sign certain types of accounts, but also right now really helped a lot of our sales partners combat what's going on in the country right now and keep everyone as safe as possible.
So basically what you're saying is free hardware is free hardware, whatever the hardware is that's needed.
So it's just a 1-to-1 ratio. If we're giving them a terminal and they need a pin pad, great, 1-to-1. If they are getting 3 terminals and they need 3 pin pads, great, 1-to-1 ratio between terminals and pin pads always.
Yeah, and I love this conversation because it really does go back to something. I made a video probably 6 months ago or so before COVID, and what we were just talking about in that video, this idea that our industry as a whole does a very poor job of managing capital investments on a small scale. Mm-hmm. Like, I talk to agents. You would not believe how many times I talk to agents that are like, I don't know what to do. I have this account. It's going to bring me $700 a month in residual, but they need this equipment and it's going to cost $2,000. And I'm like, did you take math class in 6th grade? Like, that's a good idea, hello. Like, but of course the problem is they don't have the $2,000,
Right.
And so what happens is, they reach out to their ISO and their ISO says, here's our document about our policy regarding free placement. Wait a second. This is an opportunity to make $700 a month split, however it's going to be split, and it requires a $2,000 investment. That's a no-brainer ROI. Why are we not making these investments? And more as technology and integration plays into it, it's getting more and more challenging for agents to get these deals done. And it's like, we just want to get the deal done. And it's so I'm really enjoying this. It's actually super interesting,
And
conversation.
we encourage our partners to bring us those deals. Those are the ones that excite us the most. And it's probably because of our roots, right? So again, I started out there knocking on doors. Some of the best accounts I ever signed were the most expensive accounts I ever signed.
For sure.
And I would, at that time, I didn't have too much money. I mean, I was a college student.
Sure.
So, I would take whatever I had in my bank account and, that was going to the POS company that was going to charge $1,000 to, add some sort of module or something that they needed. But I would get a really killer account out of it.
Right.
That would then end up, funding future accounts. So the model is something that's been ingrained into us from the beginning. And, I understand and sympathize and understand completely some of these agents can't necessarily afford that whole upfront cost, but come to us, bring those deals to us. We are excited by them because we know that those accounts aren't going anywhere and they're going to be worth the long term.
Right. Yeah. And I like that. And I'm enjoying it because I'm really hoping that, number one, obviously I'm sure a lot of our listeners will be interested in learning more about PayBright, but I'm also like hoping this trend catches on a little bit better and others in the industry start to realize that you can actually make investments and get deals. So, all right, last one I have to talk about because it is so interesting when we look at it through the lens of free placement is cash discounting.
Mhm.
Now, this is one where, frankly, I think you and I might even we might disagree a little bit. That's fine. I've been of the kind of idea like, hey, we're going to save the merchant all this money. Let's make some more money, so let's lease the terminal, let's rent the terminal, whatever. But I think it's interesting because it is starting to mature a little bit. It's not like the newest thing out there anymore. And agents are starting to kind of get through the low-hanging fruit and they're starting to run into a little bit more of a block. So talk to us about how you see cash discounting and free placement. How do these two ideas come together in your mind?
So I think personally, leasing is a mistake for a lot of reasons. And of course, there's a million opinions. But anyone who's tracked the industry over the last 10 or 20 years has seen that leasing in the traditional space has certainly become old school. It is not the standard way of placing terminals anymore. There are still plenty of companies doing it.
Sure.
I have my own opinions on that.
Sure.
But the majority, I would say, and I think most people would say, are no longer leasing equipment.
Sure.
But when credit card processing was less competitive, was a newer industry, leasing was the way it was done. And I think you're going to see the same thing with cash discount. People just were able to repackage it the same way. It was a less mature way of selling in the industry. So there was an opportunity. I don't always believe the opportunity is something you should take, but it was there. To me, leasing has all the ethical issues, but from a cash discount perspective, here's my issue with it. You're telling merchants, here's this great opportunity. You're most likely to acknowledge that they have one concern, which is, are their customers going to like it?
Right.
And you're going to tell them they're not going to care, they're going to like it. You're going to sell and do everything we do. But you're then still locking them into the terminal with hanging in the near future potentially. We've all had accounts that have tested cash discount that haven't liked it. It's inevitable.
Sure.
It's a low percentage, but we've all had it. But these merchants are still locked into that $50, $100, sometimes $200 a month lease for 3 or 4 years.
Right.
So what I really love about our program is that what we say is what it is. No commitment, free trial. Try it out. There's nothing holding you there. If you don't like it for any reason, you're not locked in. We take essentially on that liability, that risk. And it also helps our sales partners sell more business.
Sure.
On the one hand side, you can convert more accounts, but I also think you have happier business owners if anything ever comes up, which to us is really important.
Yeah, well, and I think it is interesting too, kind of, devil's advocate to my own view.
Sure, I understand. I know there's opinions.
No, I totally get it because a couple interesting things play out in my mind there. Number one is these accounts are so profitable, that it's like, if we can take our closing percentage up just a little bit, totally worth it. Right. So I get that. And the other piece of it is, it's also kind of interesting that you really want cash discounting to be like locking them in long term, because who's going to sell them? They're not paying anything. So it's like, how are you going to flip? So by doing the lease, I could also see maybe a competitive weakness there, where it's like, now somebody could come in from PayBright and say, oh, they leased you a terminal. Well, you can do cash discounting with us and you get a free one, so
Right.
you're leaving yourself open to like the only one remaining weakness of cash discounting,
Yeah, I mean,
Yeah, and I think also, as Dustin said, it's sort of like, I'm giving you this great deal, but you still have to pay me something.
right?
That kind of,
Get the barrier up.
yeah.
yeah. We want as little friction as possible. And with these high margin deals, it only makes all the more sense. You want to sign those deals whenever you can and keep them in any way you can. So, having a lease, I think, actually can become a hindrance from the sales perspective. I don't think it helps you.
Sure. Yep. Good deal. So Dustin, I really think we could just keep talking for quite a long time about all this stuff. It's so interesting. But I really, before you go, I definitely want you to get a little bit more information about PayBright to our audience. So can you tell us a little bit more about the types of agents that tend to do well with PayBright, and then maybe some contact information of where you would send them if they want to learn more?
Yeah. So we work with all types of agents across the country, all walks of life. The majority of the agents we work with do have an experience or background in our industry already. Those are the majority. They've been selling in a lot of cases for years, but we work with everyone. Somebody who's a week in and has been, following your podcast and your training content, and that's the extent of kind of what they know so far, and everyone in between.
Sure.
But we have agents everywhere that are looking in a lot of cases for something that goes along with what they have. I mean, we tell agents all the time, hey, our program is a really great complement, maybe, if you're really happy with your other processing solutions. What about the deal that you have that you were struggling to sign because of equipment placements? Maybe you start with that one with us. So I tell agents all the time, if you want to use us as a complement to what you have, we're happy to have that conversation. So we work with all kinds of agents. The best way to reach out, of course, is either by phone or email. If anyone wants to chat, of course, they can go to our website as well. And of course, I'll give you that information. You can email me directly at dustin@gopaybright.com. That's GOPAYBRIGHT. So Dustin@gopaybright.com. You can call me directly. I'm always happy to talk to an agent, even if it's price, experience, just to be a resource, and they can reach me directly. My number is 856-904-6561. And of course, they can go to our website. They can always put in, a contact us request. Don't know that that'll be me that reaches out. Of course, I don't normally, handle those requests. But whoever would be reaching out is more than qualified to assist as well. And our website is just gopaybright.com. So, anyone that wants to get in touch, we are happy to assist however we can.
Awesome.
Great.
Dustin, very enlightening today. Great conversation. I just really appreciate you taking the time and sharing the insights with our audience.
This is the Insider's Report with Patty Murphy.
Okay, well, James, this week I'd like to take a little bit of time to remind folks of the importance of knowing your customers, and in many cases, knowing your customers' customers.
Okay.
This is a credo that we hear a lot in financial services, but sometimes people ignore it, or they kind of like pass over it, like they give it lip service, but as a settlement agreement recently entered into between Fiserv and the Federal Trade Commission shows, it can be a costly proposition not to pay attention to this. Fiserv agreed to pay the FTC more than $40 million to settle allegations that First Data Merchant Services, which Fiserv acquired last year, knowingly processed transactions that were tied to scams that bilked thousands of consumers out of millions of dollars.
Wow.
Yeah.
Fiserv was like, we're so glad we bought you.
They bought you, right? And, an FTC attorney blogging about the settlement, said that, this should be a warning to payment processing companies that the agency really expects them to be vigilant against scammers that use the card processing networks to perpetrate frauds. And, we know that that's what is the old Willie Sutton thing, that you rob banks because that's where the money is. Now it's credit cards, right?
Right.
So, the FTC, just to kind of educate people a little bit, it gets its authority from the Federal Trade Commission Act, which, among other things, prohibits opening and maintaining accounts for shell companies and those engaged in other types of fraud, or ignoring evidence of client frauds. The FTC also had was endowed with powers under the telemarketing sales rules, which address things like credit card laundering. So this settlement involves a case that stems from the actions of an ISO, First Pay Solutions, which apparently had rogue employees falsifying applications and boarding hundreds of what the FTC said were facially false merchant accounts tied to 4 different scams, some of which used stolen credit cards to bill consumers without their consent. Now, First Data was aware of the problems at First Pay Solutions as early as 2012, according to the FTC. And at one point, the ISO's merchants, blew my mind, accrued over 300,000 chargebacks in less than a year, which represented 40% of First Data's chargeback violations for its entire wholesale merchant business.
Wow, I'm really surprised that the risk department didn't shut the account down fast.
Right? Yeah. I mean, the situation was so troubling that executives at Wells Fargo, First Data's acquiring partner who was working with this ISO, sounded the alarm and terminated its processing contract with First Pay. Visa banned the company from boarding high-risk merchants and actually levied a $19 million fine after its forensic accounting firm found deficiencies in its risk monitoring.
Huh.
So you would think that given that, First Data would cut this company loose, right?
Right.
No, they actually purchased the ISO and hired its CEO.
Wow.
Yeah. And then it asked Wells to, make an exception and let these staffers that it inherited from the ISO to continue boarding high-risk merchants.
Wow.
So this is what the FTC who was he? Daniel Kaufman, Deputy Director, Bureau of Consumer Protection at the FTC said, quote, First Data is paying $40 million because it repeatedly looked the other way while its payment processing services were being used to commit fraud. When companies fail to screen out fraudsters exploiting the payment processing system to steal people's money, they're breaking the law and injuring consumers. I think it was pretty forceful. I think 40, when you think about it, that's really, when you look at what Visa fined them and what the FTC settlement, we're talking like, close to $60 million.
Wow.
And
made that acquisition a little bit more expensive when First Data bought that little ISO there.
Right? Yeah, that's what I thought. You kind of wonder like what's going through their minds. It's like, just get rid of these people.
I'd love to hear the other side of the story. It's like, I'm sure First Data, that kind of stuff just somehow fell through the cracks, or there was some kind of con in terms of maybe who knows, maybe some of the ISO employees were presenting it in a certain way, or were in cahoots, or who knows what happened. But
yeah, they the First Data, or Fiserv rather, did issue a statement saying these were rogue agents. It doesn't represent what First Data really does, the standard stuff. Yeah, blah, blah, blah.
Which, I guess in their defense, a $60 million mistake to them is
not that bad.
Like a $10,000 mistake to me. So
but still, I really think it really goes to, you really got to keep an eye on your agents and make sure that they're not in cahoots with fraudsters.
Yeah, there really are things that can definitely be done. And I think in our industry too, it brings up an interesting point where I think a lot of the focus in terms of fraud and security and compliance is around technology now.
Right.
But you can't forget the human element, that there are still ways that, humans can cause some serious problems in the payments.
Yeah. Like with these guys, some of the things they were doing was forging applications and, putting through bogus invoices and things like that. Right. Well, technology isn't necessarily going to pick out some of those human actions.
Right.
It could point to trends, and that's certainly an issue.
Right.
But this is still a human business. It's still a face-to-face kind of thing, and you really need to just be aware that it is a regulated business. The FTC does have jurisdiction over. This is not the first time they've come after a payment processing company, and it probably won't be the last.
Sure. Yeah. Wow. Well, very interesting. Well, be interested to see how everything kind of plays out there. But yeah, definitely an interesting one for sure and a good reminder.
Yeah.
And now, here is questions from the field with James Shepard.
So, Patty, as usual, I get a lot of questions about cash discounting and
Oh, yes.
related things. And one of the questions that I've been getting a lot of from a lot of different agents revolves around issues with, taxing. Is there tax charged on the extra service fee revenue?
Yeah.
What about refunds? What about is it a write-off? All these things. And I'll get into a little bit of the specifics there, but I've covered that in other videos. The way I really want to answer these questions kind of in general today is I'm starting to see a very interesting and potentially troubling trend if you are an ISO that specializes in selling cash discounting. Cash discounting has really been approached so far in this very ad hoc way of, well, it's just cash discounting. You just add the service fee on, and then you do a daily discount on the statement, and that's it. And then it's whatever. And
Right.
I've even talked to a shockingly large number of ISOs that have said things to me like, well, yeah, the customers do have issues with the way that it reconciles with QuickBooks or whatever, but we just tell them, look, you're saving $8,000 a year. What do you want? Just deal with it, And, what's really been interesting to me is I'm finally starting for a long time now. I've been like, okay, what's going to be the next phase, with cash discounting, right? Like, because it's, again, we talked about in the interview a little bit ago with Dustin. It's like, you're saving them 100% potentially. So
Right.
how is somebody going to come and flip this merchant account? And I think I finally know how. I think what they're going to do is they're going to recognize that, the truth is cash discounting still has some very significant pain points.
Sure.
And and so it's like, sure, you're not paying anything, but another way to look at that, a lot of ISOs look at that like, well, we're never going to lose that account because they're not paying anything, But another way to look at it is you've also kind of in a way cheapened the service in a way, meaning you're not paying anything. So if I come to the merchant and say, you're not going to pay anything with me either, well, all of a sudden the barrier to switch there is not extremely high.
Right.
And then the other trends that are going along with this are cash discounting is very rarely integrated with decent technology, right? There's very little attention paid to the way the statement reads. So there's a lot of confusion. The reconciliation 80% of the time doesn't work correctly.
That to me is the real killer there, right? Because if you're having headaches on the back end,
right,
$8,000, if you're spending 2 hours a day,
right,
trying to deal with this, you start it starts adding up. It starts deducting from that savings.
Yeah, and to give you a more specific example of this problem, what's happening is a lot of times it's the accountants that are coming back and saying,
right,
what is this?
Yeah.
And they're like, well, I'm charging more to my customers, and then somehow I'm not paying processing fees. And the accountant says, yes, you are.
Yeah, you are.
I got your statement. And they're like, well, no, because it kind of offsets. And they're like, well, it doesn't match up. Like, and all of a sudden it's planting these seeds of doubt.
Right.
Where they're like, wait a second, did I get scammed here? Like, what happened? And in actuality, they really are saving a lot of money. Or if you could look at it, they really are increasing their revenue enough to offset the expense. But, that's not enough. And so what's going to happen is as companies, and there are some out there, so fair warning to those of you that are thinking you're in the clear, there are companies out there who are, number one, integrating a cash discounting program into a legitimate POS solution. They're working on integrations with different POS, ISV partnerships and things like that. And number two, there are companies who are starting to take it more seriously in terms of structuring it correctly so that in the event of a refund, there's not some massive confusion about what just happened in terms of the cash discounting. And so this is I think we've approached cash discounting from this very simplistic viewpoint, which is fine early on because, it's like the simple approach. It's so much better than traditional for the mom and pop shop in terms of cost. But it's like, well, who cares about these little nitpicking things? But what's happened now is those little nitpicking things have started to become the only thing left. And so now there is that space for competitors to start to come into your accounts and like, oh, we already have this cash discount program, which by the way, they can see by the sign. So it's not like you're trying to hide in plain sight. They know, if I'm a merchant services sales rep and I'm working for a company that has a fully integrated, well thought out cash discount program, and we've thought about how it integrates with QuickBooks, I can walk in and say to any merchant right now that has a cash discount sign up and say, hey, I see you're already doing a cash discount program. That's great. Let me ask you a question. How has it gone in terms of integrating that with QuickBooks? How does your accountant feel about it?
Yeah.
And immediately I'm going to have just as negative a conversation as I would have before with traditional processing because of service or rates or whatever else.
Right.
So there is this kind of gap there. And so I think it's crucial for those who are trying to really focus on the cash discounting and the opportunity it presents. It's time for you to think through, go ahead and create that frequently asked questions.
Yes, I was just going to suggest that. That's a perfect way to do it, right?
Yeah.
I mean, because it's also proactive. It gets you thinking about what could be the problems, but it also, so when the new agent comes in, it's not going to be as easy a sell if you already understand all those pain points.
Exactly.
And how it's addressed, right?
Yep.
And when you do that, of course, I would imagine you also have to have the answers, right?
Well, and that's what I love about it. It's funny, like right before we started recording podcasts today, I was doing some screenshot videos for our new interchange optimization thing that we have on our getisoamp.com. And, while I'm doing it, I took like 3 takes for the first one.
Right.
Because I started it and I was like, wait a minute, is that how I want them to do that? And I'm like, stop that a second and think about it. So make those frequently asked questions, how does cash discounting affect refunds? How does cash discounting, how do you offset it? How do you collect the money? Like another one, Patty, that's one of my favorites is this problem of reconciliation will come up. And what a lot of ISOs do is once they have the merchant on board, they say, well, you know what? The only reason you're having all these problems is because of the daily discount. So let's just go back to traditional, billing where we just bill you once a month and, you are collecting this extra revenue, which is going to offset. So yes, that does solve the problem.
Yeah, but that seems,
But now do you realize that you are now debiting? So this merchant was spending $800 a month on merchant services on the certain day of the month. They're now being debited $1,400. Now, granted, you did get them $1,400 in extra revenue, but you're not documenting that on the statement.
Right.
So now all of a sudden it's like, trust me, we've eliminated your fees.
Yeah.
You're still paying them, but trust me, we really did. And it's like, again, right now that might work. 2 years from now, it won't because, things evolve, things improve. And what's happening is a lot of companies are going, wait a second, cash discounting seems like it's going to be here for a long time. It doesn't seem like Visa's taking the decisive action that we thought they were going to take. Maybe it's time to invest $200,000 in developing a better software solution for our POS that integrates this,
Right.
So those are coming. So just be aware that, don't sit back all comfortable because you have your cash discount portfolio that you're making a fortune on. That's great. But are your merchants actually happy? And if there are pain points, rather than minimizing them under the auspices of we're saving you so much money, who cares? Understand that you now are going to have a lot of competitors who can save them just as much money without those headaches.
And be proactive and start investigating these fixes. You know what I'm saying?
Yeah. For sure. Awesome.
Good. Thanks, James.
Thank you for listening to the Merchant Sales Podcast. Whether you are an industry veteran, processing executive, or just trying to learn about the payment space, we appreciate your time. The Merchant Sales Podcast is a joint production of Greensheet.com and ccsalespro.com, and we hope you will tune in next week for more information and tips on building your merchant services business.